Hi, thank you so much, Anthony, for being with us. I am so excited about that topic. We are going to talk about finance. So please, can you introduce yourself and tell us more about how parents can have a healthier family relationship around money?
Absolutely. Liddy, thank you so much for having me on. I really appreciate it. And to your point, I'm here to help families figure out how they can afford certain finances and make sure that those financial strains don't bear onto family stresses and the family dynamic, because that could be a really big concern for people that, hey, I've got a bunch of young kids, I work a 9-to-5 job. Sometimes it could be hard just to pay for the mortgage and vacations and whatnot. And to think about future expenses like educational expenses could be a little daunting. And what I'm hopeful to do is show you a little bit on my end of how people go about figuring out how to combine their resources and planning strategies to accomplish multiple things. And ultimately, again, being able to pay for those educational expenses down in the future. Let me show you, if you're okay, some strategies that I have. And if you have any questions, by all means, feel free to interrupt me and let me know, and I'll answer those questions. So I'm going to share my screen. So a little bit about me first, as I dive into this. I'm a young father myself. I've got 2 beautiful little girls and a fantastic wife that helps me take care of them. I couldn't do it without her. And, we're already at the point now where we have a mortgage. We have payments for childcare. We're now thinking about educational expenses and how to pay for future college. So there's a lot of responsibility on our plates as to how we're going to afford these things. And the other part of it too is making sure that there's something there for our kids and my family. God forbid something were to happen to me. Because we're so young, the financial burden really falls on us because our children wouldn't be able to survive if we weren't there to be able to pay for the expenses and all the fun things that they're going to need throughout their childhood growing up. So what I'm showing you here on the screen right now is a life insurance product. And this can do a number of things. First off, it provides a tax-free death benefit. Most people understand that portion to it. If I pass away prematurely, my family gets the death benefit to them completely tax-free. But this strategy with an insurance policy could be also utilized to pay for college expenses. And let me show you, thinking about my youngest daughter, who just turned 1. So what I did first was I looked up some of the average state costs for states' tuitions. Typically, you're looking around $45,000 to $50,000 on an annual basis. So I'm using a premium to help to justify that amount of money that will have to be spent for college tuition payments down the road. And when I did something like that, I came up with a $7,000 annual premium. And for $7,000, that could purchase me a death benefit for my child in the state of Florida of $522,000 and change. So God forbid, again, she passes away, our family will receive a death benefit tax-free of $522,000. But what's really the driver behind all of this is the net policy values. These are called cash values. In some other insurance products, like a whole life policy, you'll see them referred to as dividends. And this will be the amount of money that would be utilized for insurance purposes. So over time, as I continue to pay my $7,000 into this policy, my cash value accumulation bucket will grow. And by the time that she goes to college, let's say she goes to college at age 18 or age 18, she would have $174,000 of cash value. If I take 174,041, and if I divide that by 4, that gives me $43,510 on an annual basis that I could take from this to pay for college tuitions. So to me, with a policy like this, you're alleviating a few concerns. One, you're giving your child the life insurance that they need. They could have this coverage realistically for the rest of their lives if they wanted to. It didn't have to go to college. So if something happens to them along the way, they get sick, they get hurt, you can elect to keep this policy for forever and allow them to have this insurance. By the time that they get to college and you don't need the insurance anymore, you could elect to take the cash value, $43,000, almost $44,000 per year to pay for your kids' college tuition. To me, one of the best parts about this is the money could realistically go towards anything. It doesn't have to necessarily go towards college expenses. Other plans like 529 plans are great. Everyone should be utilizing those as well and talking to their financial professional about those plans. But the only downfall really towards them is if you do invest inside of a 529 plan, the money that comes from that has to go towards educational costs. So if your kid decides they don't want to go to college or they get a full ride scholarship, let's say, then that money inside of that plan isn't going to be accessible, or there will be some tax penalties for utilizing it for other means. With an insurance policy, this cash could be used for anything. So if my child at the time they turn 18 decides they don't want to go to college, maybe they want to open up a restaurant or whatever the profession that they choose or what they want to do, they could use that money to start their business. They can use this money to purchase their first home. They could use this money for their own children if they get to that point later on down the road. So there's so much accessibility to this. And the last thing I'll say is, God forbid, again, something happens to your child where they get sick on the way. Maybe if they tried applying for insurance on their own when they were sicker, that premium is going to be a lot higher compared to what we're seeing right now for that same death benefit or cash values. With this, you're able to lock in those rates and have it for the rest of your life. So to me, it's a win-win situation where if you die too soon, your family gets whole through a tax-free death benefit. You can have the cash accumulation feature to pay for educational expenses. And if you decide that you want to keep this for your children and not use it for those, your child can keep the insurance for themselves, continue to pay the premium, and have great accumulation inside of this and a death benefit for the foreseeable future. And I hope all of that makes sense and everything right there. Okay.
Yes, I understand. I was wondering, is it a term, a specific terminology for that type of insurance? Because it's like, life insurance, but at the same time, if you can cash out, is there any term that we should be aware?
There are a number of different terms that you could be conceiving. It depends on the type of insurance policy that you're talking about. The main general term that you want to just throw out there would be cash valued life insurance. And most people will assume that means whole life because that's the flavor that everyone knows. This is called a current assumption universal life or an index universal life. Basically though, they all offer the same things with guarantees to a certain duration and on the death benefit to last to a particular age and guarantees of particular amounts of cash value. And on a projected basis, they could be even higher. And for the general public, they don't need to know those sorts of things. That's where the expertise with myself and my firm, Georgetown Financial Group, come into play, and we'll be able to help clients figure out what's really the most beneficial for them. So cash value life insurance would be the ultimate term.
Okay, I understand. With all those numbers and, we were able not to go in depth because, it depends of the situation, if you're married, not married, if you also, how you are physically, your health, there is many variables. So now, what can you say to people who might not be inclined or comfortable about, having those premium every month, but not really seeing the money, So what is, the thought that they need to have, the mindset that they need to understand so they can jump into that adventure, that new policy?
Right. I would say this. I would say that from the presentation and the quote that I had just shown, this would be me electing to fully use life insurance to pay for my kids' college educational expenses. You don't have to do that. You can have other means to pay for this. Again, this is where you want to address your financial professional. And Georgetown Financial Group would be willing to have a conversation with you if you are interested. But there's a lot of other strategies that go behind paying for educational expenses. This is just one sliver. So you don't have to fully insure educational expenses. You could do a portion of it. You could, make it the smallest portion if you really wanted to. The idea here, though, is that you're killing two birds with one stone. You're getting the life insurance that your children need, and you're locking that in, and you're getting the cash accumulation to help pay for those expenses. But you don't have to have it, again, be the full source to pay for those things. It could be a proportion of that. So maybe a family is only comfortable with putting in $1,000 or $2,000. That's totally acceptable and totally okay. We're just trying to make sure that in this example, you would see what it would take for me to put my daughter through college, just utilizing an insurance policy right here. But what I take away from this is I'd much rather spend $7,000 on an annual basis rather than paying $60,000 out of my own pocket, for 4 years to pay for her college tuition payments one day.
I understand. Thank you so much, Anthony, for your time. I will put all the information into the description box so we can reach out to you and ask, specific questions. So thank you for giving us, that test about how it is important to think about tomorrow and to think about our children's future, because, it's now that we can take care of them, and we need to think now about what we need to put in place so then they can be protected, a couple of years later. So thank you so much. Do you have a last word to share?
No, I really appreciate you just bringing me on board, and I thought this was a great experience. So I really appreciate it. Thank you.
Thank you so much. And remember, we have that mission. That's why we have all those experts coming to pour out to you, parents, so you can understand and see how easy it is possible to have a healthier family relationship. We need to take action now so we can make sure that our children will be able to become the person that God called them to be. So thank you again, Anthony, and stay tuned for our next speaker. Thanks again.
Take care.